G'day everyone, Ben Kingsley here from the Property Couch, and no Bryce. That's right, normally it's Bryce standing next to Nerida Conisby from the REA Group, which is realestate.com.au. So it's our first live for the year as we take a look at the property market. So we're going to spend the next 20 minutes going through all this great information that you're going to share with us. So thank you for joining us.
Pleasure. Thanks
Welcome to the new year and the new decade.
The new set as well.
And a little bit of the new set. There's more changes to come. We're not quite finished yet, but thank you for acknowledging that. I want to start with talking about interest rates because we've got the rate announcement tomorrow. So what's the scoop for our listeners?
I think it'll be a hold.
Yep.
I think at this stage, we haven't really seen too much amazing data coming out. We did see those better than expected retail trade figures in November, but really just driven by the Black Friday
sales,
really pulling ahead December. So December data comes out on Thursday, so we'll get a better idea then. Inflation is still low, wages growth is still low, building approvals are up, that was good news. House price growth is certainly
I'll come
up,
back to those building approvals.
And then we have the unemployment rate went down a bit. So we've got some good jobs growth. So, I think overall it's not exactly firing, but it's not bad enough to cut rates. And I think particularly with what's going on with the coronavirus and impacts of the bushfires, I think the RBA will just hold fire at least this month and potentially another month.
Okay. So, and what sort of impact do you put on some of the external factors? Obviously we know that phase one of the trade deal was done with the US and China, so that's a positive. Brexit's just recently happened, counted down over the weekend. So really it is this coronavirus that's probably the big uncertainty as it spreads around the globe.
Yeah, terrible. It's interesting. The Brexit and the US-China issue was such a massive issue last year.
Huge.
But, they've kind of rolled through. It seems to not be having a big impact. We've had bushfires, which is a little bit variable because on one hand, it is a massive impact on people personally, and we do have some really big issues around rebuilding, tourism suffering, agriculture suffering, but the rebuilding effort will add to economic growth.
Correct.
So it's not exactly a positive, but from an economic growth perspective, it will add. The coronavirus is obviously very unknown as to what it will do. It does depend on the severity of what happens. At this stage, it's looking very SARS-like. So SARS was back in 2004. Big shutdown to economic growth in China at that stage. We weren't so reliant on China
back then. Yes, things have changed
massively. So anytime China slows down, we slow down, and it could have a big impact on our growth.
We saw, obviously, post the China deal, US deal, equity markets around the world did really well. There was a nice bounce in January. We've obviously seen some poor numbers this morning and some, the China markets opening after their extended Chinese New Year period because of the coronavirus. So, red ink all over the boards, all around the world. So we're just starting to see that first impact in terms of how it's going to play out. But as you say, if it keeps spreading, we really don't know where it's going to go. So I'm with you in terms of thinking. I'm a believer that there's probably going to be some rate cut in the first sort of March, April.
I think the banks are saying April at this stage. So they thought February. They've changed their mind. So I think this is the thing. They do. This is the thing with the rates. You can't. Anything can happen.
Correct.
And we try to understand what is going on, but then coronavirus. Who could have predicted that would happen?
That's true.
It's, there's things that we know will probably happen. Even things like retail trade at this stage, with the price growth that's occurring, we should be seeing better retail trade. But that's not happening, and so there's a lot of stuff that's not happening that should be happening at this stage.
And I know your specialisation is more property, but do you have a view in terms of the surplus, the effects on the potential surplus for the government? Is there obviously the fires are going to cost more, the rebuild program is going to cost more, fighting the fires is costing more at state and obviously at federal level. Do you think that they're at risk of their surplus basically being reduced?
Yeah, absolutely. There's a lot going on in Australia that will cost a lot. Bushfires, as you mentioned, if the coronavirus extends, could get expensive.
Yeah.
And then we also have an issue around monetary policy not working the same way as it has in the past. And so this year's budget will be interesting. I mean, do they stick to their guns with a surplus, or do they say, well, all right, well, we need to look at other means to get the economy going. So do we look at, bring forward tax cuts? Do we up the infrastructure spending? Do we, look at, giving, some sectors a bit of a boost? Do we give tourism some sort of...
Because they've ramped up a bit of their infrastructure program. They've brought forward some of those things that were sort of 12 to 18 months away, so they've brought them forward. I think the tax cuts have got to be on the table. I think it would be crazy not to be looking at those, but politically they want that surplus, right?
They are hanging their hat on it.
They need it because they're the only political party that would have brought the budget back into surplus.
Yes.
Both times now. So I think there's some political mileage in that, and unfortunately, we as the public, we have to put up with the politics of the day. All right, let's change pace a bit. Let's get into the property space now. So what have you been seeing in January around the demand on the site? And in particular, I wanted to have a look at some of the larger type properties, the 4-bedroom market that we've basically been exploring. So can you take us through why there is such demand and where is that demand for the 4-bedroom properties?
Yeah, okay. So maybe I'll talk generally about demand and then also about big homes. So generally, we are continuing to see this Sydney-Melbourne premium story. If you have a look at inner east of Sydney, northern beaches, inner west, Melbourne, inner east, we're seeing really, really high views per listing in those areas. It starts to, and then, sort of becomes a bit weaker as you move out from those areas. And then we are seeing very, very different conditions with regards to units versus houses. So houses at the moment in Sydney are growing across the board. We can see that pretty much in every location house price growth is occurring, but very different on apartments. So when we look at unit price growth, we're still seeing a lot of weakness in Western Sydney. Western Melbourne, we're also seeing a bit of weakness.
Is that because still the supply side, I mean, we're starting to see the finalisation of that building boom that we had through 15, 16, 17, 18 carried on? Is that because of that, or is it just now a combination of that, but also the uncertainty around cladding and construction and all of those other pieces that are going into to making it a bit more difficult for the medium and high density stock?
Yeah, I think it's all those things. I mean, if you have a look at Sydney, it was quite late to the boom in terms of construction, and it kind of finished quite late. So that's part of it. People are very worried about quality, and so that's causing problems. And then also we've got very weak rental demand conditions as well in a lot of Western Sydney markets. So we've kind of got this combination of things, which is making that part of Sydney take a bit longer to catch up. It'll be fine. We know Sydney's growing, it needs more housing. Part of the issue around Sydney pricing is that there's never enough housing being built. So it's not necessarily it won't be dire forever, but it will take a bit of time to recover.
Now, I mentioned earlier that we saw the numbers come through for the construction approvals, so for the planning approval permits. That was quite surprising. I mean, they do bounce a lot. October was pretty ugly, but then November just had this bounce where we did see evidence of really high increase in medium and high density, especially in New South Wales and Sydney. That surprised me a little bit. It did. So I don't know whether that's because it's going to be an up and down. December's going to be flat in January. We'll see in the next couple of months in terms of whether the trend is your friend and whether that's coming back or whether it was just didn't get the paperwork in, or someone was away doing the approval stamps. It's hard to know.
So, I mean, also even their approvals. So whether they'll go through to construction is, will they get the pre-approval? Will they get the pre-sales?
Yes.
I mean, that's the problem too. We don't have the same level of overseas interest. We do have a lot from Hong Kong coming through, but Chinese interest is still very low. So there's a lot of things that need to be sorted out.
Yeah, and for me, that's one of the more challenging markets segments within the property market. That medium and high density stuff has got some headwinds, and I think it will underperform the broader market. But coming back to those 4-bedroom apartments, houses, I should say, that's where we were, right? We went around. So they are in short supply, especially when you come closer in, and that's the sort of stock that people want.
Yeah, they do.
They definitely want it. So you've got shortage of supply, high demand. So where are those areas that are experiencing a lot of eyeball views on realestate.com.
Yeah, so we had a look at 4-bedroom homes.
Yep.
Bedrooms with 4+ bedrooms.
4+, yep.
And Borkham Hills comes up in Australia as the highest views for listing.
Yep.
So, it's interesting, Borkham Hills, someone referred to it as St Ives of the West, which I thought
that's interesting.
Could be
because there's
those really big homes, big blocks, which they're
Transport
just
infrastructure
great
going in
located, well located. People really like being in that suburb.
And what sort of median price in that sort of particular area for 4 bedrooms in Sydney?
It's a lot cheaper than St Ives.
Yep.
But, you're still looking... I know there's poor quality homes.
Yep.
Poor, very unrenovated.
Yeah. Older style.
You can get... I think you can get in for about $1 million, but, you're really looking... If you're looking at a 4-bed, you're getting up to, at least mid, 1.5.
And look, for Sydney prices, that's pretty good, relatively speaking.
Absolutely,
and you combine that with, as I said, the transfer nodes and the infrastructure that's going into those areas. It's highly desirable, and with the older ones, I think there's an opportunity with those older style that you can improve those assets, and you're not paying the premium.
Yes,
because you can add value to those particular assets. I also have number 2 on here was Hawthorn East. Well,
beautiful.
It is one of the most picturesque suburbs you'll see around Australia, not just in Melbourne. I know I'm a Melbourne boy and I'm a little bit biased, but it is a stunning area with those plane trees and everything that goes with it. Blackburn, big blocks.
Big blocks and East and Leafy.
Bit hilly. But we've got a bit of a trend here, haven't we? We've got Hawthorn East, we've got Blackburn, we've got Malvern, Glen Iris, Vermont South, Camberwell, Malvern East, Eltham and Northcote. No other city or state. They are all Melbourne suburbs.
Melbourne. The strength in Melbourne is pretty apparent at the moment, especially East.
Yeah.
We can see Eastern demand very high. Pricing is doing really well, particularly for houses.
Yep.
It is a sort of, I guess, a continuation of trend that people are looking there and they're buying there, and that's pushing up value.
Now, for me, everyone has potentially short-term memories, right? Because if we go back to late 2018 and into 19, the East was suffering the most in Victoria in terms of the top end. So our leafy East, we call it, it was probably the most difficult marketplace in terms of its performance. Prices were flat. There was no demand. Still, what was interesting, though, wasn't a lot of stock.
No.
So even though the values went down, the stock that was selling was a poorer stock. So the median price came down with it. But now everyone's on the leafy East bandwagon, and it's showing up in the data. So that's really interesting. Which also brings me to the next area of conversation I want to have around listings. We've traditionally always explored booming property markets and slowing property markets. And the trend has traditionally been that after a boom, you would normally see increased listings coming on the market, which is pretty much what we still see in Perth. Around, there's still plenty of stock in Perth. So there's lots of supply. But Melbourne and Sydney seem to absorb that quicker. So can you just talk to us about one of the things that you've noticed around listings and what brings properties to market?
Yeah, so I guess there's a bit of it seems to be a perception that a strong market is always a good listing market.
Yep.
And we've clearly seen that that's not the case. That when the market is running, 10% plus price growth, we just don't see the listings occur at the same way that you probably would expect.
Correct.
And the reason, there's lots of reasons why. Part of it is because most sellers are subsequent buyers.
Yep.
So, when you're in a market that's moving red hot, you may want to upgrade, but you get a bit nervous about selling because if you sell and you leave it for 3 months, the market can run away with you. Or in a situation like now, there's not actually many listings, so you're kind of nervous about buying when there's really not much nervous about selling.
Selling, that's right.
So it's,
and if you can't get the finance to do that, whether it be the bridging finance or anything like that, that's also going to play on your psychology of do we, don't we? Try. So if you can't do that, then you're going to have to be that sort of buy. It's very scary.
Stressful for
very
people.
Scary.
The other thing, even downsizes are the same. If you're wanting to downsize, you might think, right now is a good time to cash in. But again, you probably want to downsize in the same suburb that you're living in or a similar quality suburb. And so, again, when it's running red hot, it can be quite a nerve-wracking thing to do. I mean, we do know that listings do go up in markets that are quite poor as well. You know, we can see in Darwin at the moment, like Darwin's just a
lots
shocker.
Of stock. Yep.
And but you know, people are selling because they want to get out. So you know, they're either wanting to get out because they can't see a recovery in the market, or they're distressed. You know, they may be, you know, sitting on a rental home that. I mean, that's not distress necessarily, but they may have a rental home that they can't rent, or alternatively, they're living in a home that they can't pay the mortgage off.
And there's opportunity cost in that, isn't there, right? In terms of, so, you know, these are the sort of times you can take advantage of these types of distressed markets. Now, the challenge with them is if you see an opportunity in that market, could be still 5 years plus before that market comes back.
I mean, you look at Townsville, it's still... Well, prices are still down from 10 years ago.
Yeah,
so, you know, you do need to be making a fairly big call as to...
Correct, and that's why we always make sure that supply and demand ratio is what we're looking at in terms of we don't want to make those calls too early because if we make those, like, if it's just coming back to balance, that's not going to deliver growth. You need imbalance to be able to get that growth. So you need demand to be significantly higher than supply. So you don't want to guess because it's in balance. Okay, it's balance year after year after year. No growth. So we always try and find those markets where demand exceeds supply, where hopefully we will see some long-term capital growth. So one of the other things that I also note in some of your release content here is that you talk about some of the government regulation that's in place. Namely about, so the downsizing, the owner-occupiers who are going to cash out. They do have some ability to move some of their funds into super.
The budget.
But it's still, when you can transition, we don't have death taxes in Australia. I've been big on the death taxing. We don't want them. Thank you very much. But these are the sort of limitations that we do have that bring strong demand, but basically... inflexible markets.
Yeah, it becomes inflexible. And I think this is the thing with the downsizing. I mean, there's a lot of people living in homes that are too big for them. Yep. But, what's the incentive to downsize? I mean, if you sold your home for $1 million and you've got $1 million cash sitting there, or, even if you buy something cheaper, 500,000, you've got $500,000. And so, potentially your pension gets impacted. There's tax implication. You get taxed on $500,000. Sitting in cash, you don't get it taxed if you're...
Stamp duty, if you're listening, government, stamp duty, inflexible movement.
Well, stamp duties are, look, if that was changed...
State-based tax, but
I mean, that would be a big one for stock turnover, but...
I agree.
It's, it is a problem. I mean, there's a lot of taxation that does prevent people selling, and it does make property, quite an inflexible market from a transaction perspective.
And then, obviously, there's, from the demand side, there is... investors like myself who come in and we also influence the marketplace as well, and we get when the property's running at a loss, we get a negative gearing benefit, but ultimately we're in the business of creating rental stock, and then at some point in time we pay the debt down, and then we start paying our taxes on that, and then when we do sell or cash out, we pay a nice little healthy tax bonus to the government in terms of capital gains tax. So it's never
hard
easy.
To get right. It is hard.
The levers are hard to pull in terms of what that looks like. All right, so I want to finish off today by just doing a quick around the grounds. We'll start with where you live, which is your home. Well, your hometown is originally Melbourne.
Originally Melbourne.
That's good. See, there's a lot of talent here. She's originally a Melbourne girl. So you're living in Sydney. So tell us a little bit about what the Sydney market's shaping up like in the first sort of couple of months of 2020.
Yeah, I mean, it's running red hot. I mean, the strongest market in Australia at the moment is inner Sydney. We're seeing city and inner south, which is a statistical division, an SA4 division.
Okay.
We're seeing 12% plus growth over the past 12 months across that area. But as mentioned before, we're very much a premium market story. We are seeing house price growth in places like Parramatta, but unit prices are still looking really rough. So it's
So the inner south there, can I jump in on the unit side?
It's fine. Look, it's not as good.
But it's growth.
Still 4-5%, I think. So it's
that.
It's good. I mean, this is the thing. When people say don't buy a unit, buy a house. I mean, buying a unit in Mossman is quite different from buying a house in,
correct,
out at Emu Plains or something.
Yes.
It's hard. People sometimes ask what's a general comment I can make about that? It's like, you can't.
Very hard to make a general
comment
on.
The unit market in Western Sydney is still struggling.
Yep. Okay. So, but the outlook for 2020 looks pretty good, doesn't it, for Sydney?
Yeah, Sydney's doing well. Like it's. We do know Sydney is a market that people do tend to speculate a lot more on.
Yeah,
and when they start to see it growing, they start to pour money and finance is cheap. People are, pretty much employed, not fully, virtually fully employed.
Economy's still pretty strong.
Yeah.
Light rail's finally working.
Yeah, light rail's working,
I was there the other week. I saw it coming up and down George Street. Only took a couple of years.
No, I know.
Extra.
It's funny. And you pay. That's sort of weird. After the city trams in Melbourne.
Yes, very true. Okay, so Sydney's looking good. Our next biggest city is obviously Melbourne. Mm-hmm. What are we seeing down here?
Yeah, similar to Sydney, very much premium, inner east, mentioned before. Western Melbourne, still taking a bit of time to catch up.
Yep.
That's typical of what happens in a recovery. We do see expensive places move first and then the cheaper ones. And then when it comes down, we see the expensive ones go down first and then the cheaper ones. So it is quite variable.
And Melbourne still has a good affordability story, really.
Oh, absolutely.
Still relative to Sydney. Wage differential is not as strong.
Extreme.
So I think, Melbourne's a good news story. Brisbane.
Mm-hmm. Brisbane's still pretty flat. It's always pretty flat.
It's got to be economic, right?
They're also very
so close to
they're very good builders in Brisbane too.
Yeah.
So we know that as soon as there's a bit of a recovery, they get out there and they start building more houses and units. So
they bring more supply.
Very well supplied for.
Yep.
Gold Coast, I think. I mean, I'm a big fan of the Gold Coast. I think that will be an area
the transformation
that
it's going to.
Yeah, it's going to.
Southeast Queensland is all going to be connected at some point,
totally.
Right? It's going to be,
if
that's right. If you argue that that's a city, it's going to be a significant city over the next 10, 20, 30 years.
Yeah, absolutely.
If they can get some type of high speed rail moving around there or a hyperloop or something like that, that's a story for another day. Okay, let's. What's next? Perth would be our next biggest by population.
Perth is still dropping year on year.
Yeah.
Perth inner has been doing quite well for some time.
I agree.
So you go Cottesloe, Shenton Park,
Scarborough.
Those areas doing really, really well. Fremantle, but anything sort of beachside. I think the problem for Perth, they're very good at building, and so what we see on the fringe particularly is this enormous level of development continue to take. I mean, that's not enormous relative to Melbourne and Sydney, but a lot of new houses
relative
go up. And it really keeps the cap.
Yeah.
I mean, affordability's improved. I mean, this is the thing with housing, is always winners and losers.
I think that the trigger there from an investor's point of view, I spent 3 weeks over there, had a reasonable look around. I did spend a bit of time in terms of Fremantle, and for the first time I'd noticed a lot of for leases signs in the little I call it a little township there. It's the old sort of wharf yards and all of that. So there was a lot of so that didn't give me confidence in that piece of the economy. But what I did notice when I went up higher into City Beach and through Perth and even South Perth, some of the stuff that's going on through there. So we're gonna keep an eye on that just to see. We think it's coming back to balance. Yeah, it is. It's gorgeous down there. I love that.
I love it too.
Loved it down there and spent some great time. It's lots of family and friends on my wife's side down there. So we're coming back to balance. I think the other thing that I like about what I'm seeing over there is vacancy rates are starting to be absorbed.
Yeah.
So from an investor's point of view, it's something that when you're seeing vacancy rates of 4% beyond, there is just no demand for rental, and you could be exposed from a cash flow point of view. So that one was something that I will keep an eye on. But we've got an eye on Perth for this year. Adelaide.
Yeah, Adelaide's doing well.
It's a good little performer,
it's solid. I know. It doesn't drop. It doesn't go up a lot, but then it doesn't drop either. No. So,
and the better areas are moving.
The
good, the bungalows and
the inner suburbs heading up to the Adelaide Hills doing really well. Very good rental demand story actually there at the moment too. We're seeing really, really high views per listing. So it's in terms of
it's one of those.
It's gone. I think rents have gone up about 8% over the last 2 years, which doesn't sound amazing, but Sydney rents have dropped. So
if you ever want to check out of a hectic eastern states life, Adelaide's the place, isn't it?
Yes.
It just reminds me of a
big country town.
An era gone by where you can walk a little bit slower and you can take a little bit more time and no one's in any rush to get in.
Though. Like
it is.
You know, like I feel like there's this kind of...
There's a vibe to it.
Yeah, the city itself, there's like really good restaurants.
Well, that's what I mean. All the talent has gone, created their money, and they're going to bring some of that money back.
Yeah,
right?
totally.
Because, I mean, in terms of if you're a child growing up in Adelaide, compared to, say, someone growing up in, Sydney's huge mega centre, it's a grind, right?
Yeah,
it's a grind.
Absolutely.
Everything's move. So I think if you want to check out of the bigger cities, Adelaide's one of those places. Actually that goes right. Hobart,
just keeps growing. Housing shortage problem.
Yep, still.
We're
we were waiting for that
supply
coming on.
Yeah, it is, but I mean, it's such a small town, correct. So it's probably easy to overshoot. So I guess they're probably moving quite.
And I think we need to give that context, right? In terms of top 50 or top 20 population, it's 13th.
Yeah, it's tiny.
So Gold Coast and Sunshine Coast are bigger than it, right? So same with Darwin. It's sort of, we have to talk about it because it's a capital, but in relative terms, I think it's ninth, Darwin or something like that. So from that point of view, obviously we've heard earlier about Darwin in terms of what's happening up there. It's just economy sluggish.
Oh, Darwin's terrible.
There's a big oversupply,
and also prices rose to a very high level, which wasn't supported.
All right, so I want to finish off. We're over time as usual because I like chatting and love chatting with you. What's your smoky from a regional point of view? Have you got a smoky for the year in the regions across Australia?
I think what we're seeing on our side is basically Byron up to southern Gold Coast. Like that just seems to be a lot of young people moving up there. I mean, we don't know for sure. We don't know.
Young people with cash, though.
Yeah, cashed up.
They are cashed up, aren't they?
Yeah.
All these influencers all moving
Sydney.
to earning their money. I don't know how do they earn that money.
Well, I don't know. They're almost like creating their own economy. I mean, if you go to that, I mean, it's interesting. I was in Byron late last year and heading to like their industrial precinct. Yeah. Like it's gone from being kind of cabinet makers and people repairing cars to people doing probably always manufactured car surfboards, but clothing brands are moving in there, and kombucha manufacturing. Like it's really changed. It's kind of like this momentum has started.
It's a beautiful part of the world. But it is going to have this enormous population that they're going to have to battle with, right, in terms of
infrastructure I'd be interested to see how the infrastructure's coping. I mean, particularly schooling up there. You've got a lot of young people with kids, and that can create quite a bit of pressure. Yeah,
very true. Well, thank you very much, Nerida.
Thank you.
Nerida Conisbee from realestate.com.au. Thank you for joining us. This is it. Our first one's over, Ivis. It's great, isn't it? So thank you, everyone, for tuning in. Just a little reminder that every Thursday, 3 p.m, is our new episode. We've finished our summer series. Is that right, Ivis? Yep, summer series is over.
Well done.
So all of us, I've got Ivis laughing. That's the most important thing. Oh, you can even hear her in the background. So thank you for tuning in to our first Facebook Live of the year. Bryce will be back, and it'll be perfect scheduling from here on in. I'm sorry to interrupt and to spoil your day, but I thought I'd give it a go. So catch up with us on Thursday as we have our first episode for the new year. Thanks for watching.